All right, boys, let's get to it. New York AM 7/16/26. All right. Let's check our All right, guys. All right, let's get rolling here. So I did take this trade in London here, the short, the previous day low on NASDAQ. We're not quite to previous day low on ES. Let's zoom out a bit. Here's a 1 hour. They're not quite there on ES. And then also on ES, you have really a hourly equal low there as well. That's pretty interesting. Potential draw on liquidity for the day. So let's go ahead and mark that out. And then all we really have underneath us on NQ at this point is our current week low. And then pretty far down there is our previous week low, which is definitely not in the cards for today, obviously. But maybe this current current low week and maybe previous day low on ES. I think those are a good draw. So what we saw on so far on this 9 o'clock candle is price has came back into this hourly fair value gap that was formed actually during my trade in London, right? And ES here, let me clean this up 2 seconds here. Just get some. I don't care about that. I don't care about that. So ES has the same gap. So I would well, just can well, I would consider that a corresponding gap, meaning they both have the same fair value gap off the same candle. So we're seeing a mean rejection off of that on the 1 hour. Quick look on the 4 hour. I think honestly, I don't see anything on the 4 hour. Oh, hold on. At 10 a.m., we are going to be opening this. That sure is a long way for that thing to retrace to go get these draws down here. So we may be okay. Coming up on 9:42. I usually let the first 15 minutes shake out or so. So we're coming up right at the time that I start opening myself up for trade. So 10 a.m., we would have this. Our 4 hour billing range as it is currently would be that. So we would have that 4 hour equilibrium overlapping our 4 hour PD array, which anyone that's traded with me before knows I really like that. But at this point, with how close we are to this draw and NQ especially, that would sure be a long way to retrace just to get this. But we've all seen NQ do some crazy stuff, so we'll see. And then we will open up this 4 hour on ES way up here. Again, not too terribly worried about that just because of how far it is. I see deep manipulation on the 9 a.m. candle, tap the high time frame PD array, pushed away. We have that same reaction and same fair value gap on ES as well. I love that. See 30. I'm trying to see what are my options for retrace here. So the most obvious potential retrace would be the 10 a.m. open that we could potentially try to the high of a bearish 4 hour candle would where that might want to seek out. This 5 minute looks really buttoned up in here. No imbalances through here. Um, we do have a 15 high FEG. This might just run, to be honest. Here's a 15 here. About to turn IFEG in 26 seconds. Let's find that on ES. So that would be here. Five-minute ES. Got a small imbalance up at the very top, but I think we're okay on shorts until ES makes these draws down here. So I wouldn't get discouraged just by this current low of the week swing low getting hit on NASDAQ. Because, the impulse is to say, well, we don't want to get in down here. What we're hoping that we get is some sort of retrace, whether it's 5-minute or even potentially an hourly, maybe up here and then deliver where we can get involved. That could come off, like I said, the 10 a.m. hourly candle. That could come like right here on the 5-minute. Maybe we make a 5-minute FEG here that they both make. We can't chase this here. We are under previous day low. I'm gonna make that dotted so that that's swept. Let's see. We can get this thing to pop back up a little bit for us. ES looks like it is. Hitting that draw on NQ, but no, just a 1-minute wick through it right now. It could want to, let's zoom back out to the 5. It could potentially sweep here on NQ, make the SMT with ES at that same low, and then that give us that bullish push. We want it to be short term, obviously, and that give us that bullish push that we can get involved with, and then look for something down into the low. Because when an SMT is formed, even if the SMT gets canceled out later, meaning that low gets swept on the other index, just because that ends up happening doesn't mean that in the short term you won't have some sort of bullish reaction from that SMT, because it is an SMT on the low time frame. It just, if it eventually gets swept, it's just not going to show up on the high time frame, meaning you're going to have usually less of a reaction. This thing is diving right now. Pull up our heat map here. So this is the NASDAQ currently. Yeah, S&P a bit stronger. So we're definitely going to be opening up a pretty interesting gap after this candle. And then we're also going to potentially open a giant 15-minute gap. And that is a very interesting place for the 10 a.m. open to want to push into to give the high of the candle. So this would be 10:15. It's not quite closed yet. We got like 10 minutes, but that would turn to a M15. Maybe you could get an 4 hour open here, manipulate into that FEG, and then start to flip and give you that bearish closing candle. And then on this low time frame, you have this run up and you have your IFEG opportunity in here to get in. So ES is giving us a nice little push. What I would also be interested in seeing potentially is, can this high get swept off the 10 a.m. open? That would be a key liquidity pool on an intraday basis. Why? Because we made a lower low here, lower high, and then we broke the low. So I then assume liquidity is there. If you don't break this low here, then that high is not a significant liquidity pool. Because think about it in a simple way. Why is that? Because if a bunch of people got in on this move short here, right, to put their stops up here for that to be key liquidity, then you would assume that this would make a lower low and break structure, right? If it doesn't, then that means you had less liquidity here than you had in the previous move. Yeah, I think that this is a nice. I think our targets here on ES are good. And honestly, you could make the argument to even mark this low as potentially achievable. That is minor sell side. We really want this market to break out in one direction. If we look at the daily chart, where, I mean, honestly, it's just really, I mean, this was okay here. Like, I'm not knocking really that, but this and here has just been very unfriendly to trade, uh, to my belief, at least. So we did actually just get that 15 gap tap, the IFEG here. And we are pushing away, but we are still going to get left 15-minute here if everything holds as is. Let's see. I'm going to put that up there and see. Let's see if that forms. because ultimately what we want is we want to find a high probability area for the 10 a.m. candle to manipulate into. If we do that, then and we get on the right side of the 10 a.m. candle, it's hard to lose money. Hmm. All right, let's see what we get here. We got about 3 minutes till that 10 a.m. candle starts. See how that comes in looking. I'm gonna pull our heat map up, kind of keep an eye on this throughout this next hour. There's the NASDAQ there. It's like semiconductors are getting killed. SpaceX is finally green. Again. All right, 1 minute 50 seconds. We're gonna bat this 10 a.m. candle. Mhm. All right, looks like we are gonna indeed form some 15-minute gaps. So let's get these uh marked on our chart, and then we're also gonna update our dealing range for this down leg. So gonna be a M15 there. Double check. Yeah, we don't have a 30. This 30 up here has already been tapped. You have a 30 open up there. So, and we still do have the IFEG that hasn't been tapped back into on NQ yet. So, yep, this is what we're looking like we're going to get, boys. All right, so all eyes for me go on this M15 on ES. I would probably still get short on NAS, even though ES has the draws on liquidity that I'm really targeting, just because NASDAQ is overall more bearish, and it still does have, you know, key liquidity, lower previous week low. Um, maybe that it doesn't hit today or in this session, but can still drive towards. So let's see what we get here. Let's also get our new dealing range mark. So that would be that high to this low. All right, so now we're looking at a 15-minute equilibrium there. And then let's do the same thing over here. And like I said, guys, this high up here is not a, to me, not a secured high. So a sweep of that would be pretty nice. That would be the hourly high, previous hour high. So we'd sweep the previous high of the last 1 hour off of the open of the 4 hour. That would potentially look nice. Let's see here. We got our Dillon range there. So here is our equilibrium. Let's be watching those equilibrium levels. Also wanted to, let's see, this 4 hour right here. I do want to put a line on my chart for the lower time frames. Know where that is at all times. That's up there. So we do have that untapped brand new 4 hour up there. Um, Question becomes, do you want to try to long into this up here potentially? See, you definitely is Asia. London sold off. We did sweep this low. So, guys, honestly, to me, if we go IFEG on this 15-minute right here, I wouldn't mind looking for longs up to this 4 hour potentially. But let's wait and see how we close here. If we start to roll over, then I still think that the previous day low, relative equal low draw on ES is the money draw for the session. So instead of predicting the market, we are making scenarios. Okay, here's my scenario one. Okay, I have Asia up here in accumulation. London sold off, swept this, swept this. Now we're getting an uptrend. If I take my most recent leg, which is this leg, right? If I take that most recent leg and I invalidate the bearish peak arrays, then I will look if I have a trade up to the 4 hour unmitigated fair value gap up here. That's scenario number one. Scenario number two is, we're in the downtrend on the high time frame overnight. We're clearly in a downtrend, making lower highs, lower lows. We have now opened up a 15-minute. We have here. Let me scoot this over just a bit. We have the 4 hour opening price here. We want it to draw into something, a bearish PD array, and see it respected. And then on the low time frame, uh, see price begin to curl over and look for IFEG entries to what we would believe to be a bearish forming 4-hour candle, which would, in my opinion, give you that delivery to those ES draws. And we would just TP our trade when ES hit those levels. ES is looking really bullish right now. NQ is also bouncing, pretty quickly through its equilibrium. That's why I love using equilibrium, because it will kind of tell you a story that sometimes just FEGs and IFEGs, they tell it too, but sometimes you have to wait longer to see the same thing. Equilibrium is a continuation confluence, just like a fair value gap. So you go down on the time frame and see exactly how these low time frame candles are behaving at that kind of middle time frame um, equilibrium level, and kind of get a better understanding of, okay, is this 15 gap or 30 gap or whatever, is it actually going to flip or not? I'm not saying you front run it, but it gives you more context that, like, hey, prices look really good to keep going high. So we got about halfway through the 15-minute candle now. Here, let's go ahead and get the 4-hour level FEG marked on the ES chart as well. All right, whoops. So back to the 15. That would actually give us this draw on liquidity too. So we're basically looking for it to go IFEG on the 15, sweep liquidity here, tap the 4-hour, and then it might give that delivery later or tomorrow or something. And a lot of the times when you start making these scenarios in your trading, you will find yourself kind of making a scenario for what's next, even like, hey, if this happens, then I know probably in the next session or two, this will probably happen. Draw out scenarios, and when you see one playing out and there's no denying it that it's playing out, then let it ride. So we got 7 minutes left on this 15-minute candle. And let's make one more scenario. So we have two scenarios so far. Here, I'm gonna write them on the screen so if someone joins, because I think scenario built trading is very important. Scenario. Is that how you spell that? So one is um, uh, M15 tap and reject or low. Two is M15 IFEG. Actually, we had this would be liquidity, tweet, M15. IFEG, target, H4, FEG. And then number 3 is actually probably my favorite, and that would be impulsive open to 10 a.m. H4 into H4 FEG. X or lower. Let's get this fine down. All right, so there's our hour. So rejects for lower. We're talking specifically PDL, ES. ES is previous day low. That here. All right, so those are our 3 scenarios. Right now, number 3, see if I give myself more than one, like think of more than one setup at a time, and I'm thinking about setups on both sides of the market, right? Bullish and bearish. Um, I might have 2 or 3 bullish, but only 1 bearish. That's totally fine. But I'm looking at both sides and I'm thinking, what is my optimal setup that I could get for that, for me to go short? What would it look like? Bam. For me to go long, what would it look like? So for me, right now, number 1 doesn't look like it's going to hit. It does not look like we're going to tap into this 15-minute fair value gap that we made off the open and reject it. To me, I mean, look at ES. This thing's flying, right? NQ is so I would take number 1 off. Okay, that one's no good. 2 is we've got our liquidity sweep, M15 IFEG right here. Target this H4 FEG right here. What do you see as the problem now with that? Well, we're only a few ticks away from that on ES because ES has had such an expansive move. Okay. Now look at number 3. Impulsive 10 a.m. 4-hour open. So here's our 4-hour open on NQ. Here's our 4-hour open on ES. Very impulsive to the upside. Do we get the sweep here? Do we get the tap? And then on the lower time frame, do we start seeing this thing turn over? And that would give us a very, very nice 4-hour candle with just a really long, nasty wick on it, which to me, when I see this long wick of manipulation, that to me is showing me the market is gearing up to deliver, right? It's like a gas station. It's filling its tank so that it can deliver all the way down into here. If there's not a lot of manipulation off the 4-hour candle or the 1-hour candle starting, then to me, that's showing me the market's really not fueling up to really make a move. So to me, that's what I'm seeing here is a very impulsive move off of the open. So very good that we did not rush into shorts just because the market was running fast and it looked very uh, bearish biased at that first, even like 20 minutes in or so to the market. Very, very good that we didn't, jump into something basically at the very low of the current down leg. Um, and now we have one of our scenarios playing out pretty freaking close right now. So we'll see how it turns out. The one thing right here that bothers me potentially is if we get the tap on ES, but NQ doesn't tap the H4. Some people look at this as like an SMT, like an FEG SMT kind of thing, which I do like. I understand, like that is what it is. Like I get that, but I feel like that's a little risky because sometimes the index that doesn't tap into the FEG does end up retracing it later and going to get it. So ideally, A plus setup wise, I would ideally want both of them to tap the H4, not just. But ES has been holding a lot more bullish than NQ, so may not get that. I don't think we do currently actually have an SMT at this high. I think about. And same as on ES, which it has just swept. I would consider this a good liquidity pool here. Sweeping the gap, or I'm sorry, sweeping liquidity but not tapping the gap. That's a little more tricky for me to get involved with. What's up, man? Yeah, you haven't missed anything yet. I did take a trade in London, but I haven't traded anything yet. But we are getting a pretty interesting move off the 10 a.m. open though. How's your trading been going, Rambo? Your paper trading? Do you have you ever tried this scenario thing? Trying to take it like an eval? I got you. Like give yourself the 2K drawdown or whatever. Uh, Hold on 1 second. I'll be right back. Do you want me to tell you how to pass the eval? So in quote real life, I'm an engineer. So I'm a numbers person. You want to know this what is statistically the highest probability way to pass an evaluation on a prop firm? So right here. So if we're say like we go, I'm gonna do it over here on ES. Say that we get up in this H4 and say I'm on a brand new 50K not funded, 50K eval account and say like whatever your target is, like that's fine. Maybe even make a target that's not even as ambitious as you think it's going to go. Maybe do one like if you think, uh, so give you an example. So if I think previous day low is the draw for this session, potentially, assuming we make it in this H4 and we start to turn over, if I think this is the draw down here, maybe I don't even aim all the way down there. Maybe I just aim to like here or something, not even to the swing low extreme. All right, so now I want to take this. So for a 50K account, you got $3,000 profit. Um, you have $3,000 profit, $2,000 drawdown. I would look at what $2,000 drawdown is, and I would take this stop loss until I'm at 0.75. People are gonna think I'm crazy. I'm strictly just talking um like the numbers, the math. Okay. If you take this trade, let's say, and with 0.75 risk to reward, if I'm risking 2,000, if I hit this TP right here, then I get my 1,500. 1,500 is the most that I can, or I'm not going to say on every eval, but the ones that I trade, like Alpha, Lucid, where you have like 50% consistency on the eval, you can only make 1,500 of the 3,000 in one day. So if I risk the full drawdown on a 50K account, and I hit TP at 0.75 risk to reward, then I made the max that I can make on that eval in one day. Now, why on earth would I do this? Because statistically, if you go under a 1-to-1 RR, your win rate is going to go way higher. People are trying to run like, 20, 30 point stops on NQ, which in the funded stage, I understand. I'm not saying do this in the funded stage. And if you're not overall profitable, like it's going to catch up to you at some point. But in my opinion, to like pass evals quick, you could probably, statistically doing this, you're at a 33% pass rate. And that doesn't even factor in, do you have like an edge in the market? Because if you have an edge, then obviously it's even higher than that. But with the numbers I've seen, like less than 5 or 7% of all evals purchased or passed, you having a 30, 40% chance is pretty solid. So you go buy 10 evals, and you're getting 3 or 4 funded accounts out of it, even without really having an edge, because you're giving the market so much room up here, like, and you don't care, like, even if it literally comes, right up there to the edge, right, and then turns over and delivers, like, you just let it run. And then the next day, you're up 1,500, and then you come do the same thing to make the other 1,500. And honestly, man, my best results once I get funded, this is just my 2 cents again. Once I get funded, no, I don't run negative RR. I really don't even do that on the eval that much, but I do risk my full 2K a drawdown, like out the gate. But I'll usually run like a 1-to-1 on the eval most of the time, and um, risk the 2K. And then as soon as I get up to that 1,500, I cut the trade. So really, I am technically doing this. I'm just cutting it early. But anyway, but once I'm in funded, I won't go under a 1-to-1. That's the absolute worst I would take. But I do the same thing. I just don't risk the same. So on a funded account, a 50K, I would put like $300 risk on, maybe like max, on something like this, and trade 1 or 2 micros on these 1-to-1 or 1.5-to-1 RR trades, and stop trying to hit like 3-to-1. Now sometimes my stuff lines up and it's like a 4-to-1 RR. Yeah, I'm going to take it, especially on a funded account. I'm not going to move my stop loss to some place that doesn't even make sense for no reason. But just in general, like, just to get those base hits to build that buffer, my advice is to scale down your size and widen the stop. and take less trades. If you do those three things, you go against the majority of people, because the majority of people are trying to hit. They've been told over and over by people on the internet, like if you don't have a 2-to-1 RR, you're like it's not going to work for you, and it's really just. I mean, statistically, that's not true. It depends on what your win rate is, right? Like it depends on how what your mentality as a trader is. And what I mean by that is me personally, I'm not a good loser. I like to win. So me trying to be a 1 to 3 or 1 to 5 RR trader doesn't make sense, because statistically I can lose, 70, 80% of the time if I have a 1 to 5 RR. And yes, in the end, I'm overall positive. But if I lose 70, 80% of the time I take a trade, my mentality is going to be washed, bro. You know what I'm saying? Like, I would rather fire closer to that 50-50, so that, like, at least every other day I'm hitting a winner, because that keeps my mentality, to where I take less trades, focus on really clean setups, those types of things. Because I used to have a higher RR, and I would go through those stages of losing 3 in a row, 4 in a row. And statistically, that's going to happen, and the probabilities were still there. And I was still doing fine overall, but just psychologically, man, like waking up every day and just taking an L, waking up the next day, taking an L, like it builds on you, bro. And then I start making decisions off of it that aren't good. So what I've found for me is like, you know, I'm not gonna say don't worry about RR, because that's ignorant too, but care less about it. Give yourself, especially in this market, dude. Look at this daily chart. I was showing this a second ago. Look at this daily chart, dude. This right here, I can't tell you the last time I remember this thing being so ugly as that. That is freaking. That's ugly, man. That's hard to trade. And these ranges like this, it's nice to trade. You know, we're making bank in these runs like this. But our problems is we get in these ruts in the market, and we give all of the profits that we make in these times back. That in these conditions, man, taking those base hits, you know, widen the stop a bit, because it may need to sweep liquidity on both sides once or twice to get down to that draw that you think is going to hit. And if you're hugging that stop loss too tight, you're getting broke even here, broke even here. Now here's a loss, here's another loss, there's another break even, because it's so back, kind of choppy market can. Right. So, uh, but what I tell everyone, don't listen to me. Don't take what I'm saying as, 100% truth. Don't take anything anyone tells you about your trading as 100% truth. Go just listen to advice, but then go apply it yourself and see it for yourself if it works for you. So my challenge for you, Rambo, is maybe next week when you get ready to start your trading week, I want you to look. I want you to do the same thing you're doing on your paper trading, but I want you to um, still consider yourself in a quote evaluation while you're paper trading. Have your drawdown. So if I know sometimes you do those 25Ks. I think those are what, $1,000 drawdown, $1,500 profit target. Is that right? I said on your are you doing the 25K or the 50Ks? Like what are you practicing? 25. What is the what is like the drawdown and target for that? Is it 1,000 drawdown and like $1,500 profit target? Is that normally what it is? 1250 profit target, 1,000. Oh, nice. That's not bad. Dude, that's even better than the 50K. All right, so what I want you to do next week in your trading, I want you to don't change your strategy, don't change your entry, don't change anything about what you're doing, right? I want you to find a 1-to-1 RR trade that you say is A plus, but I want you to move your when you have that 1-to-1, so say like this is your trade, say like, all right, I'm gonna go short right here down to previous day low. I'm just using an example here. And say this is your 1-to-1 trade, right? All I want you to do is take this and move it up to 75.75 and make this your TP. And I want you to take the same trades that you've been taking with your same strategy, but I want you to use that. So you would risk $1,000. So you would click this box, and then you would put 1,000 here. And then that TP is going to give you, actually, that would give you 750. No, that would give you 500. So, no, I'm sorry. That would give you 750. So that might put you maybe even above your thing. You might could even bring it in further than that because that math I've done is off the 50K account. So I think yours would actually be 0.67, not 0.75. 50% consistency, yeah. So let's see. I'm about to hook you up, man. So 1250 divided by 2 is 625. So drag your TP to 0.63 or 0.62. Here, I'll write them down to you. Find 1-to-1 RR trade. But move TP to 0.62 RR, wherever that is on that in the range that you're trading. And then risk full drawdown, which in your case is the $1,000 on the stop loss. And you're doing it on paper, so I'm giving you that advice since you're not actually putting money into it. I would highly suggest you look at that. All right, so we're not quite into the H4 on NASDAQ. We're coming up on now on 10:30, about 30 minutes into the 4-hour. ES looks, I mean, it looks good, a little bullish to my liking, but it may stay bullish until NASDAQ hits the H4 as well. Do need to we do need to consider our time here. And again, why is this good for me? Because, okay. All right, I'm going to say it one more time. You ready? I'm going to go through it one more time. Are you ready? All right. So if you have a trade, okay, and most people's trades look like this, okay. or they're looking for like a 2-to-1 RR or 3-to-1. Some people go for even further. Okay. In funded trading, like it that make that that I'm not knocking that. I still think uh, looking at it with slight less worry about a high RR is better, and I'm gonna go into why. But on an eval specifically, if you back your stop loss up, right, and you give yourself more room, so this would be your trade at 0.62, that would be your trade. So what I'm saying is statistically, you only have to be right twice and you pass the eval, right? So you find two trades that you can give all this room to for breathing, and you're only having to hit to here, right? You're giving yourself much more room for the market. You're not trying to pull, like you're not on the 5-minute chart here marking some swing high as your stop loss. And then if you miss your entry by literally a 5-minute market structure, you're getting stopped, right? And what people do is they paper cut themselves to death trying to hug these stop losses to that last high on the very low time frame. I'm saying that statistically, timing move day after day after day to that level is much harder than just widening this thing out some and then aiming for far less than you're risking. Because on an eval, you're not making any money from it. And if people say, well, I don't have necessarily the money to just blow on evals. I get that. But let's think of it this way. If you sit there and grind out that eval for $100 risk every trade, then you're relying on yourself to go probably 2-3 weeks of very consistent trading just to pass the eval, right? And that's 2 or 3 weeks where you're not having any profit from your trading too. And then you got to build the buffer. You're looking at probably 2 months of your time to find out or not if you're going to get a payout off that account. And you have to keep it consistent that whole time. And all I'm saying is you can run the eval in 2 days at a pretty high, a much higher success rate. Yes, you're going to have some that you blow 100%. I don't have any affiliate code or anything. I don't have any business with any prop firm. So that's not what I'm trying to get people to do. I'm just saying, from my experience, if you give that stop loss more room to breathe, and you don't sit here and aim for the extreme every trade, like I'm trying to hit all the way down to the swing low, that's an extreme. All right. If I say, yes, I think this is going to hit, but I'm going to set my trade up to where I'll only have to go to here, for example, you could give your stop loss, you could literally put your stop loss up here. You know what I'm saying? And if don't change your strategy stays the same. So if this really is the top, if that really is the top, then great. You still pass. I mean, you still you hit your max profit for that day. And you write it in your journal. Be proud that you got the top tick or whatever you want to call it. But statistically, doing that day over day, over day is not easy. Now, here's the other side of the argument. So the stop loss would blow the eval, not the funded account. But yes, it would blow the. But you only have to pick 2 trades and you passed it, right? One day, and one trade is hits your max 50% of consistency, just to 0.63 or actually 0.62. That would be your trade. And I'm just saying, like, are you not more confident that you can get this much of the market move right if your stop loss is that far away? Is that not doesn't that doesn't seem a heck of a lot more simple than trying to get this, right? There's no way to deny that. Here's the other side of it. Even in funded trading, and you've watched me trade plenty of times, I won't go negative RR on a funded account. I'll sit 1 to 1, 1 to 1.5. Sometimes it will turn out to where I can get a 2 or a little above a 2, but I'm not really looking at the RR. As long as it's a 1 to 1 and my setup is there, then I'm good. The reason I believe in this is just the mindset that I have, okay? So if you look at the math, all right, I'm gonna write it down. It's bigger here. So if you have, let's say, if your average trade is a 1 to 5 RR, right? Then that means you only have to win 20% of your trades, right? I cannot deny the math behind a high RR and the benefits of it. You can lose 4 trades out of 5. So what does this mean? Lose 4 out of 5 trades and you're break even. Okay. I can't deny that math. But for me, for me personally, and everyone's different, when I sit there and I have this many losses, if I'm waking up every day and 4 out of 5 days I'm taking a loss or 3 out of 5 days I'm losing, I have a much harder time staying within my rule set, staying within my process, keeping a level head, keeping my patience, not revenge trading, all these things. I personally like to sit closer to where 50% of the time or so, at least 50% of the time or so, I'm getting a win. So one day I'll lose. I know statistically, most of the time that next day I'm going to have a winner, right? It doesn't always work like that. Of course, I have 2 losing days in a row sometimes. I'm just saying overall in the statistics of it, it makes it makes me win more during the week and during the month. Not saying the math doesn't end up the same. If you can sit there and take 4 losses in a row out of 5 trades and it not mess up your mentality, and you can sit there and tell yourself, "Oh, I have a 1 to 5 RR. I only need 1 trade, and I'm still positive," then that's great, and that works for that type of person. For me, I'm not that type of person. I'm not a good loser. I try to get better at that with trading. Obviously, I've had to, and I have gotten better at it, but I'm still not comfortable, losing 4 or 5 trades in one week when I may have 1 or 2 winners. Even though I'm break even or even though I'm a little positive because I have a high RR, it messes with me. So for me, having a wider stop than most people are literally using the 1 minute time frame, and they're throwing a stop loss above a 1 minute high or a 1 minute inversion, and they're looking for 3, 4 to 1 RR. There are people that do this, and again, if you make money that way, that's totally fine. I'm just saying, majority of people, it's pretty hard to time these markets that precisely, right? Especially when you're starting with top-down analysis from the 4 hour, the 1 hour, all the way down to the 1 minute, and you're gonna pick that this is gonna be the top to a new swing low, or this is gonna be the bottom to a new swing high. You know, of course, we all hit those. I hit them too, but to bank on those time after time. Um, anyway, so for me, I've had much more success when I lowered my RR. I win more often, pass evals easier with less time. Uh, it keeps my mental where I need it. Because if if I lose 4 or 5 trades in a row, it gets harder and harder, even for me that's been doing this for 6 years now, to come to the charts the next day with a good mindset. And people say that they can do that, and maybe they can, but I'm not built like that. One day, yeah, I laugh one loss. I laugh that off at this point. 2 days, I'm fine. Probably after 3 or 4, I'm getting my mental's probably lacking a bit. So, so yes, in that example, the stop loss would blow the account, but that goes into the probability. Is it more probable that you pick if you have, say you get three evals? Is it more probable that you're going to pick, if you're struggling with consistency, is it more probable that you're going to find 2 winning trades with a really wide stop loss on it, or and not even a positive RR where you're literally trying to target less points than you're risking and you only have to get 2 trades right, or having to get 10, 12 trades right and come back from losses and deal with the account and drawdown and like the emotions of that, and then the wasted time of it. Like you go, a month plus without getting any payout or even seeing, are you going to have success in the funded stage? Then once you get to funded, man, keep the same mindset. Don't go negative RR, but keep the same mindset. Let me find a 15-minute high or a 1 hour high to put my stop above, to where if 1 minute structure breaks, I'm not screwed. Yes, I'm gonna have less contracts, duh, size down, and just build the buffer that way on those 1 to 1, 1 to 1.5 base hits. Bam, 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 bam. And I'm telling you, man, if you do that, your results are gonna be better. And I would also, my last advice just for my own trading is when I have more than one funded account, I do better. And the reason that is I'm able to cycle through them. So if I take a loss one day, the next day I'm going to, or my next session or next day, I'm going to not a new account, but another account that's not in drawdown. So that next day, my bounce back is a lot easier because I'm not even dealing with the drawdown. And then I'll trade that account or any of the other accounts not in drawdown. I'll go to a new one every day. And then when I really have like my favorite setup of the week or my favorite setup of the month, then I'll go to those drawdown accounts and I'll risk like a quarter of the drawdown I have available and take that, what I believe to be the best trade of the week for me, just setup wise. Something I'm very confident on. And I basically will have the ability to do that 4 times, 3 or 4 times before the account's actually blown. And that keeps me trading on accounts that are positive. That keeps me trading on accounts that, those positive accounts that are not in drawdown, guess what? They also have those minimum days required to get to that payout too. So if this account's, up a couple $100, nothing to brag or go crazy about, but it's already had a positive day. It already has one day towards payout. I'm trading that account. I'm keeping that going, those accounts going. And I'm only going back to the drawdown account when I have a trade that, and I don't over leverage them, but I'll, only, like I said, do like a fourth or, third of your drawdown you have left. But that's like that's the whole uh part of the prop firm that people have to disassociate how you live trade with live capital Like, yeah, I might blow the account on this eval if I risk the whole drawdown on one trade. Yeah, I might blow it. But you have no there's outside of whatever you paid for that eval, you really don't have any consequence to blowing that $2,000 drawdown, right? Like, and statistically, one payout covers probably not even a big payout will cover probably 10 accounts, 10 eval calls. 5 days of a $200 minimum, that's $1,000. How many evals can you get for $1,000, right? Like, you start looking at it more of like that, I think you'll. But my my point in this, Rambo, is you've kind of backed off taking evals, right? For right now, you're back on your paper trading, kind of dialing yourself in. All I'm saying is, next week on a fresh week, I want you to go into your paper trading. That's the only reason I'm giving you this advice, because you are paper trading. Go into your paper trading and do the 0.62 RR, because that's what the math works out to be for 50% of consistency on the 25K account that you're usually trading. The 1250 profit target, $1,000 drawdown, the math of that 50% consistency, that's what that works out to. That's where I'm getting that number from. So just do it on your paper trading and just see. That's what I always tell people. Don't just listen to people, me or anyone, and take it as the quote, the truth. Listen to advice, but just do it for yourself so that you know. So while you're doing your paper trading, I would challenge you to try that and just see, like, okay, if I had, you know, pretend that you have 3 evals or something. Do it on a piece of notebook paper. How many of these 3 evals would I pass this week trading like this? If you can pass 1 out of 3 evals, then, I mean, honestly, you're probably doing better than most traders based on statistics or the statistics that they tell us about that. So we got a 15-minute. All right, so getting back into it, because we are getting a bit of a reaction here. So we did not get the 4-hour tap on ES, but we did get it I'm sorry. We did not get it on NQ. We did get it on ES. We are getting a rejection. So one of our scenarios that we put out at the beginning, impulsive open to the 10 a.m. candle, 10 a.m. 4-hour candle into the H4 FEG. Right. So here's our 4-hour open here. Impulsivity, there's our manipulation. What we would assume to be just the manipulation wick on a bearish 4-hour candle. Tapping into that 4-hour PD array, rejects for lower, ES previous day low would be our draw that we would be looking for that scenario. Still would be probably looking at taking the trade on NQ, just because it is the weaker index currently. And then that does put actually a couple of SMTs. We got an SMT at this high, and then we also have the SMT into the FEG, which would be a 4-hour SMT there. Now we're pulling back into range. We have let's see. Really, all we have, the highest time frame gap that we have on both indices is the 15-minute. And we also have equilibrium. Here's equilibrium of high to low consecutive up close candles. That is our 15-minute Dilling range. Here is our equilibrium. So we are tapping now equilibrium and the M15 FEG. Our equilibrium on ES is here. Let's go ahead and get our FEG marked here. Let's get some of these other ones from earlier out of our way. Did we IFEG this 1 hour? Essentially going to flip this 1 hour gap, but with it rejecting the 4 hour, I think I give that the precedence. So we got about 4 minutes to close. See how this 15-minute closes. But anyway, Rambo, don't again, while you're paper trading, just try it. Right? You really don't have anything to lose. But all that you need to make okay, I'll look at it. But all that you need to remember is don't pretend like as you're paper trading and doing that kind of those types of setups for your passing evals, don't do it like you only have one eval and if you blow this then it doesn't work. Don't do that. Think of it as like you have 3 evals or 5 evals and you're going to, take one trade on each one a day or do some kind of setup to it, like maybe write it on paper or in your journal or something of how you're keeping up with it. But what you want to find is can I pass more evals than I fail? If you get above a 50% pass rate, then you're rolling, dude. Picture from here. Let me take a look. Yeah, yeah, something like that. But whatever, yeah, that looks great. That looks great for your eval. Now, only thing you would change on your funded is just once you're funded, just make sure you do a 1-to-1. And if there's opportunity, of course, like if you can put it below like a key 15-minute swing low or something, your stop loss, and get a 1-to-2 or something like that, then I mean on a funded account, yes, take that. If it's a good setup for you. I'm not saying don't take those higher RR trades because they do present themselves cleanly. But if you sit there and force yourself to only take that, then and especially in this market where it's very sideways on the daily, you're going to have a very hard time trading. You've got to get you got to be open minded to like 1-to-1, 1-to-1.5, those little base hits, bam. Those will keep you eating and when everyone else is struggling. I'll be right back. Yeah, on the funded, you just pull it up to 1-to-1 or yeah, yeah, just to where you're giving that stop loss more more breathing room. Like if it, if it breaks a swing high on the 1 minute or the 5 minute and sweeps a high or sweeps a low, you want you don't want to like put a stop loss that makes no sense. So no, you don't want to just like do something like this where your stop is in like no man's land for no reason, right? But like say if I'm taking this long right here from here, like I don't know, give that thing some room, man, to where if it comes down here and sweeps, then you can you can get out. I mean, you can still have a shot at it. And really what I mean is go up in time frame to where you're placing the stop loss. Like obviously this is potentially the swing low. So this is going to be a swing low on all these time frames now. But you don't really know that's going to be the swing low when you're taking that long right here, right? Because that could, sit there and peel off and make a new low. You don't know that that's going to be the high time frame um, low. But like, I guess a better example would be like if I'm going short here on that eval, do this. So now it's got to go make a new higher high of the week. Make it make sense. Make it sound like ridiculous when you say it. I think that for me to lose, it's got to go make a higher high of the entire week before it goes 14 points down. Take 2 trades like that and you pass your eval. And then on a funded account, all I'm saying is, whereas this stop loss is not sitting at a 1 minute high. Now, what really has to happen? I have to make a new high of the week, one. Two, I got to break structure on the 1 hour, on the 4 hour. I got to do some serious structure breaking for me to get stopped out, just for it to go down and tap this 15 gap. Like, which one do you think is going to happen first? That to me is a lot easier for me to determine where price is going than if I'm down on the 1 and 2 minute time frame saying, I think this low is going to get hit before this high gets ran. Now, as you get better at this and you have more time doing this, then, I've been doing this for 6 years. You can get much better at that. But these, like you and every, people that are, uh, in their first year or so, like I think it's easier ways to make not maybe not like millions of dollars, but I think there's easier ways to get to a payout of some kind than sitting here trying to say like, okay, this right here is the high, and I'm gonna put my stop loss above this. The hour is not gonna break that high, and it's gonna go all the way down to this extreme before it runs this high. Or whatever. I'm being a little dramatic, but that's kind of my point. Like that's a lot harder to do statistically. All right, so we did bounce off equilibrium of the 15-minute range. We did hold the 15 gap here. We are still in the 4-hour gap on ES, but we have retreated a good bit on this wick now. So that's looking pretty good. I still wish NQ would have tapped. So we don't have a 30-minute. The 30-minute closed its imbalance there. So it's really all eyes on this 15 gap is what I'm seeing. Care about that. So I think the last thing I'm gonna say on this, I think that when you're actually trading what is actually the low on the low time frame, I mean on the high time frame like this, and putting your stop directly under it, it doesn't make sense to widen it that much because if it runs this low, then it's probably gonna keep running these lows too, right? What I mean is, like, if you were taking let's see, like, if you were taking this trade over here out of this 1-hour FEG up to maybe this high right here, say you were looking at taking that trade, instead of putting your stop, you know, say you got in on, like, maybe one of these wicks in here, instead of trying to hang your stop under that low, like, in that moment on the 1 minute or the 5 minute, I'm saying, what's the harm of doing that? So if it wants to come and wick these people out one more time and still deliver your good, like something like this. And then instead of, because if you look at this live, here, I'll do the replay here. So if you were looking at this trade live, when you would get into it right here, this would be the extreme, right? Um, that's your quote liquidity, right? Instead of aiming for that, drag this down to your 62. That trade, you're telling you can't say that you can't find two trades to hit when you run it like that. So pretend that you have, five evaluation. Uh, don't just take, careless setups. Still use your same strategy. Keep all that the same. But if you're at like what would be a high time frame swing low, not like a lower high or lower low, and already a trend that's already forming, then you can't really give your stop loss quote extra room, and it still makes sense. But if you're on like that second leg when it's making a higher low, or the third leg, fourth leg, whatever, then you can move it down to the last place you saw it sweep liquidity to that secured low, and I think you would see your success rate jump. Many times I spent got your payout. Uh, it's kind of a hard question because I didn't start trading in futures. I didn't start trading futures until year like 4.5. So my data is probably a little skewed, but to to figure out it took me a solid like 6 to 8 months before I saw now I don't want to say until I passed the eval, but like I think for me to get like my first payout, I think probably like 6 to 8 months. Because it is a look like dealing with the drawdown and stuff, like I always traded live accounts. Like I did I originally would traded crypto and in 2020 and just like regular stocks. And then I got into options for a couple of years, and then I landed in futures. And then I originally traded futures live on NinjaTrader lot with a live account, and then I found the prop firm stuff and I started doing. But it is a little different because on a live account, you don't have you don't have the drawdown thing, so you have to kind of get used to trading with. But for me now, I would much rather know, like I would rather fail a few evals and pass a few evals in a week than to sit on one eval for a month and end up failing it. If I'm going to fail and really blow an account after I've spent weeks of grinding it, then I want at least the chance of money. Does that make sense? And if you do this and you pass multiple evals, you can do that same cycling on your funded accounts. Like if you take a loss, put that funded account to the side and trade next day, go to one that's not in drawdown and keep doing that. Keep trading the ones that are positive, as often as you can. Only go back to the drawdown accounts when you have a really good trade. And so to actually blow a funded account in that type of setup, you have to lose 4 quote A+ trades for you in a row on that one account, which for me, because I'm not doing a super high RR, pretty rare for me to lose 4 trades in a row without having a single winner. So that's how I've found success. The most payout consistency I had is when I have 5 funded accounts, when I'm max allocated, and I'm just swapping between which account I'm trading each day. And I'm, trying to leave the 1 or 2 that I have in drawdown to the side, trading the ones that are positive, getting those 5 days of profitability so I can get a payout. You get one of those accounts to pay out, you cover the cost of all 5 of them, right? Plus any of the few evals that you may have failed getting the 5. Now, obviously, your goal is not do that and not fail a bunch of evals to get 5 funded accounts. So you have higher and higher ROI. And as you get better, I wouldn't even when you get really freaking good at trading, I still wouldn't change how you trade the eval. I would still trade it the same way I just told you. Only thing I would change is on the funded account, if you want to start taking higher RR trades and you're more comfortable with that, and you have your win rate aligned to your RR and you have alignment between the two, and you have the mentality to stand whatever win rate you have, right? If you have a 1 to 5 RR, you only got to win 20% of the time, but can you mentally stand only winning 20% of your trades? Right? Wherever you find that balance for you, everyone's different. Wherever you find that balance for you, if you have that and that starts giving you higher RR trades, that will help you scale your business faster. But just to get it off the ground, bro, I think what I'm saying is, again, I'm an engineer by education, so I like to know the math behind things. All right, so I really want to see this 15 gap go IFEG here and then give us potentially entry for a lower high, or a lower high, sorry, lower low to this low. My concern is I don't want to eat too far into NQ's range before I can get ES under the inverse its fair value gap. That's the risk that I'm seeing right now because ES hasn't even tapped equilibrium, let alone going IFEG. So there's still the chance that this could hold. Coming right up on that 4-hour open for NQ. So like right now, Rambo, I'm uh, on the 15. So if I was on the eval looking for this trade, I would throw this thing above these highs, and then I'll get my 6.2. Now, if it's sitting here and it's just driving and all these gaps in here that you have for quote defense are starting to flip, and it's just clear as day that it's coming to run these highs. And I'm not saying just sit there and let the account blow, but I'm just saying like put it somewhere that if it goes there, if it comes up here in wicks or whatever, then like the trade's still valid. Kind of zoom out your time frames. You can still go down to the 1 minute and try to get you a really, really good entry. Just let your invalidation point be on a higher time frame than the 1 minute or really even 5 minute, in my opinion. If you're having consistency problems, if you're dialed in and you're running it, then it's not that big of a deal. Keep doing what you're doing. This is now M15 IFEG. It's retapped. Honestly, this looks kind of good, but I like this thing to retrace the I hit that the maybe this high at least. Uh decisions. All right, pulling back in now. Do have a really small gap there on the 5. Got a nice little 3 minute up here. Yes, already capped it. Billing right here. We are 5 minute billing range. But also, another thing that I feel like can help is like stop looking at the eval. Like with the funded account, even though it's sim funded, like it makes sense like to look at it as quote real money because you can make real money off of it. But the eval, like when you set that trade up and you have that whole drawdown at risk, but you have that wide stop and you're only trying to hit 0.62 RR, think of it as like this is $40 or whatever the 25K eval costs with the promo code and all that. I'm just saying, like, don't think of it as, oh, I lost $500. You really didn't. You lost like 40. And if you're trading live, if you're trading a live account, you know, only losing $30, that's like a break even day, basically. It takes you again, I have no affiliation to any prop firm. So and I do think people that are affiliated with prop firms kind of like I don't want to say they like cause people to blow accounts, but I feel like some people can kind of glorify uh, recklessness, and that's not at all what I'm saying. I'm I'm talking about using statistics and probability to improve your chances of success. I'm trying to determine if I want to take this. I do have this 3 minute right here. Now is this is right at my entry window because we've had our 10 a.m. open impulsively higher. It's respected that 1 hour again. Got the 4 hour tap on yes and rejection. Got the 15 minute to flip IFEG. I like this. I'm gonna go switch the MNQ here, and I'm gonna stab 2 contracts here. I'm gonna assume here that just something nice and simple like that to go make us a new low. But we should know pretty quick if this is going to work. I'm basically just risking my profits I made in London here. Really like that. Yeah. I am seeing some impulsivity to the upside on ES, but so far it's holding it down. Yeah. So yeah, 100%. So um if you drag that stop loss out on those eval trades, you will see more trades, right? But try to stick to like what is my best setup. Now I'm getting so now we've actually held the 4 hour open really freaking well. If this 3 minute gonna hold. So even on this trade that is clearly not going the way that I wanted it to, I'm not stopped off of 1 minute structure, right? Like if I would have put my stop above the 1 minute swing high, bro, like I would already been cooked. And this has I mean, obviously this is not what I wanted to do, but I, this idea isn't invalid. Really, I could put my stop way up here and say that it's not invalid. To be completely honest, thing's freaking running, bro. Holy smokes. I think this is going to sweep that high. I got some impulsivity. S&P. Gonna keep going. These continuation trades have been very hard in this market because because the market's not really trending. What you're finding is on these continuation trades, just like what I'm in right now, like, hey, we're in bearish structure on the higher time frame. Now the lower time frame's in bearish structure. I'm aiming for a lower low to be made. Those trades in this market are really difficult because there's not a lot of volatility in the market. So what does that mean? The algorithm is now having to do more sweeps of liquidity to get the market to move. So you may see these 1 minute highs get ran and then it dump down and run some lows and then it's going to pop back up and run a high and then it's going to run a low. Whereas in a trending market, it's going to those continuation trades like pull back into a gap, new lower low, pull back into a gap, new lower low. Those types of trades will um, work out a lot better. But honestly, man, like when when I see one candle do that much damage in one direction, that to me that's to me that's the market fueling up to deliver in the opposite direction. So now I have this SMT. Like you wanna be if you're gonna be wrong and get stopped out, I wanna be wrong on like at least a 15-minute time frame. Because the 15-minute time frame, the structure, I'm saying minimum, is a lot easier to get right than the 1 minute. I need the bears to stay on the gas here and run right back through this gap at just inverse. That would show me that that was manipulation and this is not a retap of this IFEG. Great. See, now it's pulling back in. So Don't want it to hold. Don't want it to hold. I don't want it to hold. But see, like I'm on a 50K, but I'm only trading 2 micro. So even if I'm wrong by 109 points on the NASDAQ, I'm really not losing a big dollar. Get that right and get rolling with that. And then it doesn't matter what you make on one account because it's multiplied by how many accounts you take it on, right? So as you get going, get some return on your investment with your prop firms and get better at that style of trading. Um, you just scale the amount of accounts. I really like these relative equals down here on ES. Think if I can get this sweep here, I think this at least delivers a lower low. I don't want to see this though. Need this thing to stay down. Stay down. Yeah, that's not what I want. So if this was indeed a sweep of liquidity, because this high, why do I call this valid liquidity here? Because this high here it delivered a lower low. It broke structure. If it doesn't break that structure, then I don't consider it liquidity. So that should have been my liquidity sweep. If that's enough, right? If this is not enough, then it's going to go for the next one. And then obviously this is going to get cooked. It's like gas in your car. I need this thing to start peeling off. Uh Need that lower high. What I'm thinking is they're tapping this 15 and trying to gate people into this trade. All right, there's our lower high time frame. Let's see if that holds. I need this candle to stay down. We actually have a 1 minute right here that I need to get ran. Got 11 minutes left on this 15-minute candle. It does already have some sort of down wick on it though. Lower high is not holding. Doesn't look like it's going to hold. So the instant drawdown trade, I literally got like one tick in profit. Sometimes that happens. Need this lower high. Nope, it's not gonna get. Come on, Trump, tweet. Need this break. They're holding price pretty well. Got this one on this. Making a lot of hammer candles out of that gap. Come on, run through that thing. Really not a good idea to have that untapped 4 hour right at my stop loss. I mean, not right at, it's up here, but because we have an SMT in that gap. ES tapped it and rejected, NQ rejected a 1 hour gap, but it did not tap the 4 hour. So that's the risk to this trade is that NQ continues to drive. By the way, you playing game sports. Yeah, man. Hold on one second. I wish I would have me a little 1 minute gap like that on my next long. Good lord. Bye bye. All right. There's my trading day. Another thing, last note, and I'll answer your sports game and games question. The other thing that you need to practice is so like right here, I'll use this trade that I just took as an example. Okay, let's zoom this out. Okay, so my entry criteria for this was this 15-minute IFEG, and then it came back to retap it, and we had on the 3-minute, basically this little gap here. Let's ignore that. We had this 3-minute gap here that I knew it could potentially draw into, and then I gave it one more high, which was a 5-minute high, and I put stop loss above that. Really, if I bet I would be willing to bet money that this stop loss would probably be protected. And honestly, my trade idea isn't really invalidated until that high. I just didn't want to risk it. Anyway, let me put this back. So my point, as now it's rejecting as soon as it stopped me out. My point is, so I went in on this with $500 open risk. Okay. So full stop would be 500. Okay. But as I'm trading this and say like this goes down into profit some, right? As I start getting into profit and I'm getting any micro pullback, say 1 minute, 5 minute, 3 minute, whatever it may be, any clean pullbacks into FEGs that are rejecting cleanly, I'm going to use these opportunities to scale into my winners, right? At least the first, say, like 50%. If I take this line and my TP line, wherever 50% is, if it's in this quadrant, then I'm looking to scale into. Now, I'm not doubling my position or anything like that, but say I went in 2 here, then maybe, one more here, one more here. And as I'm doing that, anytime that I get a sweep on liquidity, like it just did to me right here, where this was the high and then it swept here, anytime I'm getting that, then I'm moving that stop loss down to that high, because that to me is a protected high. What that allows me to do is when I actually hit a full TP winner, then that helps me with that risk to reward, right? Because really, yeah, when I go into the trade, it's 1-to-1 or 1 to 1.5 or something like that. But it's something that most traders on the internet would consider low RR. But if you get good at scaling in and adjusting your stop as you scale in, if you get good at that, then even though you're only risking 1R and you have this much window, you got plenty of space and room for it to breathe, even though this didn't give me the result I wanted. This still may deliver, honestly. Anyway, I gave it room to breathe. I got $500 at risk to stop out, and that's getting invalidated on the 15-minute time frame, not the 1 minute. And if I start getting the trade to move in my direction, then I'm going to scale in and keep that same $500 risk the best I can. And then ultimately, ideally, right, if say I, take a swing low that I want to go break stop loss to break even at, right? At that point, I will still scale in under that. And then my break even point would come down some, but I'm okay with that, because what I'm trying to do is I'm trying to catch a trade that is a 1-to-1 in the sense of probability, right? But when I get on the right side of price, I'm gonna be a pig. I'm gonna be greedy. I don't want to say greedy, but like I'm gonna keep hammering the move when I see that I'm right. Does that make sense? Because everything I'm doing comes from the higher time frame. Um, so, so as I get more and more and more and more confirmations that hey, this swing low is gonna get ran, then I want as many contracts as I can, especially if I'm at stop loss to break even. I want to add as many contracts as I can to where my break even is still maybe at a 5-minute high or 3-minute high, somewhere that makes sense. That's not like just putting my break even point at no man's land. That you got to kind of think about in your head, right? Like if price is here and I have two contracts off this line and I scale in one more here, then my break even point's going to be somewhere in here, right? You have to take that into account as you're adding more and more size to make sure your break even or make sure your stop loss isn't adding to your open risk, one, and two, you're not putting your stop in some random spot that doesn't really make sense. So there's an art to that, but getting good at that will let you have that wider stop, have that lower RR trade, but will still get you those big trades, uh, like a high RR will, without having to have a stop loss on a 1-minute high. Right? Does that make sense? Um, yeah, I do play games. I used to be a big Halo gamer when I was a teenager. And then played a bunch of the Call of Duty games as well. Lately, now that I have kids, I don't have as much time to play games as I used to. But I did actually just re-download my GTA 5, and I have played that a few times in the last couple weeks. Getting ready for GTA 6 because I'm definitely gonna get that game. This is looking really good for my same trade, guys, to be honest. It kind of makes me mad that I didn't put my stop higher. These relative equals over here about to get ran, potentially on ES. Um, Here, guys, give me. Oh, Rambo, let me show you something real quick. So when I switch accounts or do anything like account based, I didn't like. Obviously, I don't want to share all that on screen. So I made a filter thing that I can put on like over my screen like that. And then I added this. Look, thought you'd think that was fun. And then I can, open my account. And so I'm still at $590 in profit today on this account. Getting a little late though. The idea is there. What I don't like though is here's our 4-hour opening price. Our whole scenario is based on impulsivity, which we got. We got another liquidity sweep of this high here. I like that. And then we went into lower, bearish market structure, pulled back in. That's when I got involved, looking to break this low. And obviously, we've just ran this high on the 5-minute and rejected again. But what I don't like is this all comes off of getting a bearish 4-hour candle, and this just being the manipulation wick of the 4-hour candle. But I don't like how price bounced off the 4-hour open. Like it's basically holding that as support right now. And ES is nowhere near its 4-hour. Way down here. Because ideally, or not ideally, technically where's my scenario? Oh, that was on MQ. The third scenario is what we were just trading. impulsive open to the 10 a.m. 4-hour candle into the 4-hour FEG. ES tapped it, NASDAQ didn't, so we actually made that as an SMT. Objects for lower, targeting ES, previous day low. Now we're pulling back into 5 minutes. Clean this up a bit. What's that 15 looking? It's really respecting that IFEG there. Wicking through it, rejecting. Because even ES, well, I guess the 15-minute hasn't really closed as a lower high yet. Our 5-minute on ES, which is the more bullish index, has given us a lower high, but it also gave us a higher low. Didn't sweep. Neither did NQ. Actually, sorry, it's not even that low. It didn't sweep that low. This might continue higher now that I'm looking at. Drag these. Okay. Now you're holding that equilibrium of your 15-minute range. And you went under it here, and that's what tricked us into our trade. Now you flipped it, went under equilibrium, bounced off the 4-hour opening price, and now you're holding equilibrium as support. Maybe this is a great example, actually, what we were just talking about, Rambo. This right here, where you have higher lows, you have higher lows like this. This is where on that eval, man, you can give yourself, you can give that stop some room. So you could take literally something like this, bro. Just say, I think that, oh, and then your trade basis is all at the high time frame. I believe that this is going to grind higher and tap this H4 gap before it dumps and makes a new low of the week again. And I'm going to get, I only need 62 points or 62% of the points that I'm risking to hit. And of course, man, if you get up here and you're up, don't sit there on that eval and wait until you're exactly 50%. Sometimes you may have to go on that third day and make $100 or whatever to bridge your, or $50 or whatever to bridge that little gap left. But if you use your limit order like this TP and set that TP to exactly what you you're going to get for it, you should be fine. Now this is looking like it's wanting to reject it. So it inverts to 5, and now it's running it. See, this is also what I was saying, is this is a very tough market to run. Whoops, very tough market to do this in. Putting your stop on a 5-minute structure, it's hard, bro, because it's not trending. I mean, that's why my London trade was so good, because why? Because for once, we got some accumulation and we started to trend. And look at this, right? Very little drawdown. I was able to scale in. That's why, even though this was a 1-to-1 RR, I'm still up $590 on the day, because when I have my winner and when I see that I'm on sides and I see that you know, it's moving the way that I want it to move and the 4-hour candle's forming the way that I want it to, then on all of these little micro pullbacks, I have opportunities to scale in. So at one point on this trade, I was break even when I started with like 4 or 5 contracts on micros. I was break even to this high right here uh, with like 7 or 8 contracts. So by the end of the trade, I'd almost doubled my size without increasing my risk. But because when you have a market, and this is why it's important to trade different market conditions, but when you have a market that the daily chart looks like this, or it looks like a barcode on something at the store, it looks like that, man. Just remember that there is a reason the market is not trending. Okay. It's not trending because you're not getting a lot of volatility in either direction, right? If you did, then the market would be trending. So what does that mean? Okay. So if the market is not trending, then it's going to require baiting people in, sweeping liquidity, manipulation, all of that to happen like it always does, but it's going to happen more frequently. It may sweep a low, and then we're all looking at that like, oh, London low just got swept. Let's target the highs. And then it starts going up and it breaks a high and you think you're good. And then it comes back down and sweeps a low again. And then it keeps going back up. You get a lot of that liquidity here, liquidity there, liquidity here, liquidity. You get a lot of that kind of back and forth. So, especially in these markets, trying to put your stop loss on 1 minute, 3 minute, even, I mean, 5 minutes. Okay. I use 5 minute some myself. I'm not completely opposed to that, but I really like 15 minutes. Like, if the 15-minute break structure, then I'm probably wrong on my idea. But just because I get stopped out here on the 1 minute time frame, that does not mean that, say I believe that this is a higher high forming, and it's going to continue to trend to this 4-hour. I'm not wrong, at this point, or this point. I'm really not wrong until all the way down here sweeps, but you can't risk. I don't think you can just put it anywhere. because then you won't make any profit. But you can at least give yourself like a structure break on the 15-minute or something so that you have a little more wiggle room. Still think this might go over, but I see the volume kind of dying. All right, brother. Have a good day, man. Yeah, I'll catch you tomorrow. Oh, guys, decisions. All right, I'm gonna stab two again here, but I'm gonna watch very carefully how it reacts off this 4 hour open. If it starts to hold this as support again, I'm gonna look to get out and call it for the day. The whole setup is around that low breaking. I'm sorry, the 4 hour candle being bearish to get us to these lows. So stop, I'm going to put above that 15-minute that stopped me out. I would consider that my sweep on liquidity, aka I was liquidity. Buy stop going up here. We're looking really just for this low to break. We got a lot of lows jumbled up down here on ES. Really like something impulsive to get us out of this zone here. If this starts to trickle back into this consolidation zone, I don't like it as much because it could just chop until PM session. I want to see it really drastically run these lows, start really digging into this 15. All right, there's a couple lows there. All right, all those lows have been swept on ES. Now we need to be cautious of a bullish push now. Actually, no, I take that back. Why is this $1 million question? If someone gets this right in the chat, I'll buy them a eval. Why is this low right here not a liquidity sweep? Or why should you? I'm not saying there's no liquidity there, and there's liquidity everywhere, but why should you not use this as a potential entry for longs? If somebody gets anybody on Twitch, what about YouTube? All right, doesn't look like anybody wants a free eval. All right, so the answer is on the higher time frame. This is our higher high. This was our higher low. Now, what did this higher low sponsor? It sponsored this lower high. Because this is a lower high and it did not break structure, then I don't consider this low like a big liquidity pool because there was not enough buyers in this leg to make it as high as this leg did. So I would assume that there is greater liquidity under further down than this low. So I would not bank, not saying it can't happen, but I wouldn't bank on this giving me some nice, IFEG entry for higher. Okay, we are potentially going to form us a little 5-minute that we could potentially use for scaling. See how this is opening up for me? This will be 2 minutes, 47 seconds, and then we'll get this 5-minute potentially. This is where we really take it to the bank, guys. When you're right, like, get your money's worth. That doesn't mean over leverage yourself to where your stop loss is now 3R or something. Not saying that. You have to keep your risk in mind when you're doing it. Very good push away there. Tap in this 1 minute right here. See if that holds or not. We are now below the 4-hour open. So we now are on a bearish candle, although very small bodied right now. 1 minute, 45 seconds on the 5-minute. That's where my eyes are really at right now because of this gap that we would be potentially forming. Nothing catching my eye on a higher time frame than that. Now, we did just start a 1-hour candle. We do have a little higher wick on it. We do not want to see this candle start buying its way all the way back up. That would leave me to believe that this is the manipulation of that candle to then flip into a bullish 1-hour candle, right? So that'd be an open, low, high close candle. We definitely don't want. I am going to go to the 1-hour. I'm going to mark that as my H1 open. See where that is. Okay. So if we start flipping this 5-minute, we're also going to be flipping the hour candle. I'll probably more than likely use that as my invalidation to this trade. just because we're now in the lunch hour. All right, 2 seconds, 5 minutes about to close. All right, those are officially our 5 minute gaps now. Here is our 5 minute billing range. Our equilibrium is right above that PD array there. And then over on ES puts us there. That is actually perfectly overlapping that 5 minute. That looks nice. I would like this 5 minute. So you guys really need to use these candle formation as part of your, like, what catches your eye. What is catching my eye right now? This 5 minute has opened lower pretty strongly. ES has a little bit of a wick, but NQ doesn't have a wick at all. That to me is kind of scary for potentially a 5 minute candle that looks like this. Bullish, right? But we do have this 5 minute gap that maybe it wants to pull back into. So not like invalidation if it does, but that's where your mind needs to be, is how's the candle forming? All right, we need a break. We're breaking the low here again. No, not quite. All right, there's the low taken. We need ES to take it. Do have this as an SMT in the low time frame currently. Need to see that break. I think it did. Did it? I think it's equal. All right, there we go. All right, SMT invalidated. Good. Now this is the ideal spot right in here to start looking, okay, where could I potentially add into my winner? I'm seeing that I'm on the right side of price. How can I add in? Okay, what do I look at? All right, I know what my hourly candle looks like, right? My 4 hour candle. If this is going to continue bullish or bearish, I really don't want to see it really flip the 4 hour again back bullish, but especially this big H1 candle, I don't want that to start flipping bullish either. I have this is my 15-minute high. I have a 5-minute high here. So I could easily bring my stop to this, right? If I start scaling in, maybe I can move a stop down to here now to this 5-minute high. Right? And then I scale in again, bam. Now I don't want the H1 to flip, right? I'm moving down my stop as I scale in to where it makes sense, right? Not just to random places. But when you get on the right side, man, you got to freaking take it to the bank. Another big confirmation for lower would be this 15 finally flipping on ES. We got 1 minute, 18 seconds for that. See how that closes. That was respected. We got a little 2 minute farming right here. 56 seconds. We really want the bears to stay on the gas here on ES. If we can get this to flip, it might give us a retap for the IFEG, and that could potentially give us a micro pullback to look to scale. That's what I would be looking for. As ES IFEG retaps, give us a scaling opportunity. And then we just walk through. I got a 5-minute high I could go to. I could go right above the hourly open. Say I don't want an hourly candle flipping. and then I could trail down to the 4 hour. This high right here is right above the 4 hours, so that would be a good high to put my, stop above as I trail it down. Start thinking like that, then it's really going to serve you well. Yeah, hourly gap, but it's already been tapped a couple of times. All right. So we did get our M15 IFEG. That looks good. Let's see if we pull back in for a retap. So my last green candle on the 15 is right here on ES. Take that down to the swing low. There's my dealing range. Now, sometimes you're not, sometimes you'll have trades just freaking run in your direction and you won't get the chance to scale in. Don't do it. Don't get a good pullback, and don't take your money if your original idea hits without giving you that. Take the win, man. So it did pull back and tap like literally to the tick. I don't know if that's all it's gonna want or not. But if downside price continues this previous day low and relative equal low, uh, which is a 1 hour relative equal low, I think looks good. And then the range from here to this high, 50% is now broke, pulling back into, and we would look for that along with this dealing range from here to here to, kind of be our rejection point as they overlap with that IFEG. You still have that 5 minute that's open. Two minutes up. See how it does. Also look at your billing rate. 2 minutes. All right. So this would be potentially where we could scale. Take it. All right, going into 4 now. So now I've doubled my risk or doubled my size, sorry, but I'm not gonna be doubling risk. I'm gonna actually take this all the way down. I want this thing to really start to push. I really don't even want this 4 hour to flip. I am gonna give it that M5 just to give myself some room. I don't wanna smother it too hard. I do wanna leave to where it can tap that and reject. So we're making new lower lows. That looks good to me. 15-minute is tap back in and now is flipped bearish. This to me looks this, and then this one's starting, going higher. Now it's flipped and pushing down. Looks good. Let's keep on this gas though. 9 minutes on that 15. I really want this thing to get some legs. All right, good job, ES. I want this thing to stay on the gas. Need it to dig. So as far as TP, that would be my 1-to-1 there. I really think this previous day low is going to get hit on ES. I really think that that should be the draw on liquidity for the session or for the day. Um, at this swing low, I've got to go break even on the trade though. I got to take my risk off there because it could sweep this low and give a SMT with ES. So I scaled in on this candle, maybe in there. So if I took off the two that I scaled in, I would have gotten 40 points roughly on those two contracts at that point. Really want this fit. I got 6 minutes left on the 15-minute. Really want to see this thing continue to extend. Thinking about it. 15's now flipping back bullish. And we would be opening a 15-minute fair value gap now that I'm seeing it here. That it may play out of. Two minutes, 40 seconds on that. I got some decisions here to make, guys. Uh do I want to hold through the 15-minute tap and potential it inversing and taking me out negative? Or would I rather just cut here and re-enter off the 15 if I get a good entry? I don't want to take a winner to a loser. Right at the point where I scaled in. This thing's slightly green with the bearish PD array forming right above it. More than likely going to tap it. And then my dealing range would be there to all the way up here. I don't know, guys. I don't really like cutting trades and then re-entering, but I'm already positive. Okay. I could do two things. I could cut now and then potentially re-enter. I'll say that. Or I could just use the 15 tap to scale in even more and then move my stop to wherever that high is in that 15 as it starts to turn over. Like that 3-minute candle. 27 seconds to close. Oh, decisions. That's going to leave the gap here. Yes, that's a little higher to go. That may drive NQ. Really don't be in drawdown now that I've scaled in. There's my tap. This 5 minute here or something. Equilibrium up right at my original or my new break even. All right, we got our tap on a yes. This is where I need to see it start rejecting. Right here. There. We can 17 seconds here. Come on. Come on, Bears. No. Can do it. Go. No. I'll take it. All right. Stop's going to 6. And I'm dragging stop to the top of this FEG. All right. And now I'm looking at all this as low resistance liquidity. I want it to flush it. I'm going to move my original break point to this low now. Yeah. 8 minutes left on the 15-minute candle. Really good high wick on it so far. Need this thing to start turning over downside. I guess you technically have relative equal highs here, though. That kind of sucks. Should just sweep through this liquidity if it's going to go. This as a low. Tap this 1 minute here. Come on, give us our rejection. Or not. And looks pretty good. 5 minute candle to break the downside here. Holding price in here too long. Tumbling up all these lows. Come on now. Just forming more liquidity down there. Oh wow, it wouldn't this low. So current S&P, very small right there. Need that to break. A new 5 minute candle. S&P invalidated. Pushing these lows on. Five-minute is opening bullish here. I'm wanting that to be the high wick. That 5 minute start to turn for that 15 still sitting basically at the open, slightly bullish. Really don't like how it's holding this area. Makes me want to think this is going to go dig into. If that's our sweep. Pretty sweet. S&T. get some gas. If we don't get gas off that sweep, then we probably just need to close because it's going to need liquidity higher than that. It's about all that I want to give it. I don't really want to take the risk on it running this high at this point. Come on, we got to break this low. Eyes on this play right here. Quite. Come on, man. Just sitting here. I don't like this. Telling me it doesn't have enough fuel. There's only one way it gets fuel to go lower, and that's the sweep highs, which for obvious reasons I don't want it to do. ES is looking weak though. What's up, Rainbow? Yeah, we're floating a little profit right now, but considering closing, to be honest, because it's not looking like it's going to deliver for. About to get a new 15-minute candle. I really wanted to break this low before we did. He's bouncing one spot. Yes. There's that 15 open. Getting higher. Oh, I didn't want this freaking 15 candle. Really wanted that low to break. Now it's holding the low. Already swept liquidity and it's not delivering. Go. Go. We broke that low. Now we got an SMT uh, here. All right, SMT's cleared. All right, got past that. All right, almost a break even. Keep on trucking. So we can get some wheels. I need to take some profit before the next 1 hour candle for sure, at least. Really want this 5 minute and fit this 15 and this 5 to clear this low. I don't really want this 5 or this 15 to peel back up. Come on, foot on the gas. Foot on the gas. Come on, foot on the gas. NQ looks like it wants to break. ES is holding a little stronger. Thinking about it. So Rambo, you can see on this trade, look, here's my first arrow of selling where I entered. Pullback, sold more, pullback, confirmation turning over, sold more. So my initial, I was only had 2 contracts. Now I'm up to 6 contracts, and my risk is even less than my initial risk with 2 contracts. You gotta, so you don't want to over leverage where you have to pull the stop too close. I really want this 1 minute to hold. I don't want to see this thing start pulling back, going into the top of the hour. Come on, NQ, go take that low for me, please. It looks like it wants to fight. My concern is we barely tapped this 15 on ES. And then we would be opening a 30-minute in that same spot in that exact same 15-minute gap here on ES. We'd be opening uh, a bearish 30-minute FEG at the top of the hour in 10 minutes. I really need to be risk off and take some profit by then. I really want to at least get down to this low. ES is just kind of holding and chopping. Kill this. I'm killing it. I'm out. All right, guys. I'm gonna head on out. I'm gonna just take my money and dip. So, but I would have probably. I'm just throwing numbers out there, Rambo. But I would probably would to take profit there. I probably would have made I don't know $100, $200 with just 2 contracts, right? And I got out with like 300 something. Honestly, I probably could have sat in this a little longer, but honestly, I'm kind of tired of looking at the charts I've been on here. 30. All right, guys. I appreciate y'all joining the stream. I'll potentially be on for London session tonight and uh, New York AM in the morning. So